Let's put the focus then on a Mastek, another IT company that is in focus. We've seen this countered to a rally about 12% in just the last week alone. It's gained over 100%. In fact, if we look at the last year, a very strong move coming into a Mastek. And of course, the company is looking to accelerate growth further in the second half of this financial year. We have Abhishek Singh, Group CFO of the company, joining in to really highlight some of the key triggers that we're watching out for in terms of the company's outlook. Thanks for joining us on the show. First off, just want to understand the impact of the currency depreciation. 70% of your revenue exposure is onshore. Does that in any way curtail the benefits that you might be seeing from currency depreciation?
Yeah, good morning, and thank you for having me on your show. Currency has been the hot topic over last few, and on expected lines, most of the IT services firm with a certain level of onshore offshore tend to kind of get benefited by it. On the contrary, us as an organization, we are relatively immune to the currency movement, given the kind of work that we do. A large part of our business is delivered onshore, given the digital transformation work that we do. And these are largely on-prem at customer site as a first tranche of engagement. So to that extent, the movement has a muted impact on our bottom line. But then there are some open positions for the inward remittance, which we'll see some benefits coming in.
All right, so just to understand then, how much of a benefit are you looking at if we talk about the full year of fiscal 19, and what is the hedging strategy at the moment?
See, hedging strategy at the moment is essentially about wait and watch and take a cautious position, keep a good portion open, as well as keep covering incrementally. Because these are uncharted territories and none of the experts are able to guide. If I had to take a GBP is to INR as a reference, and that's been our significant book. At every levels, we have had guidances coming from industry experts, banks, and whatnots about, yeah, these are the good levels, but every day we seem to be moving in different direction. And from our own experience, we do believe that United Kingdom fundamentally is a strong economy. It was driven by Brexit shocks that the currency behaved in a certain way. It's coming back into play. So it'll be for us a cautious approach as we move forward. A good part of the book would be open, a good part would be covered, so to speak.
All right. Any outlook then that you could share with us in terms of your EBITDA margins as all the incremental investments have now been done? Where can we see that number moving?
As a matter of fact, we continue to invest in the business. Over the last 12 to 18 months, we have significantly enhanced our capacity both in UK as well as in US markets. As you imagine, UK is far more matured for us. The kind of work we do with government or with retail sector, as an example, requires a very high-end delivery capability that we have invested in. In US, it is about coverage and getting that expertise both in the digital commerce space as well as some of the value-added spaces, ancillary, which helps us retain customer for life. So we continue to invest that in that, and at this point, you would have an upward bias on EBITDA is how we see it.
All right, so possibly expect things to maintain, if not improve, going ahead. You mentioned Brexit. Just want to get your take on what kind of impact you're bracing yourself for in terms of Brexit, and also in terms of the US business generally. If I'm not mistaken, the second quarter is a strong one seasonally. What is the outlook? What should we be penciling in terms of the US business for the second quarter?
Right. See, Brexit is a very interesting phenomena as far as we are in the services space that we are in. By the last count, the 27 to 32 new departments are to be created by the UK government to service the needs after coming out of the EU. And these new departments would present itself with significant IT services opportunity. In addition to that, there are a lot of stuff that UK was dependent on from the EU's point of view to get those services. Those things are also coming in, which are driving the services requirement incrementally. So a lot of strategic projects with a very clear visibility of 2 to 3 years of IT investment in them, and we are servicing that space. So from our point of view, we see good opportunities coming our way. If I move onward to US, to the other part of your question, I think it's a mixed bag. The service space that we are in is related to retail, where H1 is relatively stronger in terms of demand, given the fact that it will be good Cyber Monday, Black Friday, Christmas and New Year events. So retailers tend to kind of finish all their major project prior to the end of our fiscal Q2, and then Q3 and Q4 is about incremental activity and not a major one. So that's the space we're in, and we expect the same seasonality to continue.